The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to discuss the crypto markets is Nauman Sheikh. He's Managing Director at Investment Advisors, Wave Financial. Hello, Nauman.
Hi, Lawrence and Emily. How you doing?
Good to see you again. So I'll keep the question short and sweet. Price go up is basically the question, but what are we seeing here in the market?
Yeah, look, I think we're in a sort of bad news is good news sort of market, with the with the sort of loss of momentum of inflation and deteriorating economic indicators. You had the Fed come in and essentially pivot to a data dependency, and the market took that as dovish, and obviously everything rallied. We started bottoming in June, and July was where the rally picked up, and well into August. So at the moment we're in this mode where even the market is data dependent. So as long as we see bad economic data come in, and by bad I really mean just loss in momentum of anything related to a hawkish figure. So Bitcoin is range bound at the moment. It's hit a $25,000 sort of resistance levels. So has Ethereum hit a 2,000 resistance level, and frankly, so has the S&P. It hit a 200-day moving average before it sold off again. I think we're in a mode where the macro environment is supportive of the market, and will retest those resistance levels and hopefully break. And the other thing that's going on is, given the fact that the macro is supportive, we've seen a decoupling of crypto from traditional markets as well. So we've seen a lot more sort of crypto-specific narratives, which is fueling the rally within crypto. So we have the Ethereum merge at play, for example. You were saying, Lawrence?
I was going to say that the decoupling has happened now for several weeks, as we started to see that the merge look more successful. But do you think that we could potentially see a reversion to crypto kind of following the NASDAQ, kind of following tech stocks, the way we did very briefly, it seemed, but earlier in the year? Do you think that at some point it goes back to not just being a risk asset, which it always is, really, but it goes back to being this sort of tied to tech, as tied as it was before? Or do you think that the decoupling will sustain itself, that higher interest rates and perhaps even a more hawkish Fed than the market currently anticipates is not going to have an effect on crypto?
Yeah, I think if we get a surprise sort of inflation shock or an economic sort of or rate shock, yeah, for sure, it'll revert back to more of a macro dependency. I mean, just keep in mind, one thing that we're all watching is the dollar. It doesn't sell off; it remains really strong. And that's a sort of harbinger of the fact that things are not all okay still, and inflation is still pretty high. To get a true rally coming in, we need to see a sell off in the dollar, frankly. So that is the risk, and then the tail risk is obviously the inflation remains high, and if that remains high, the dependency with macro will remain. But as long as so we're all data dependent at this point. But as long as we see
the odds of a dollar sell off are pretty slim, though. If we do see this continued hawkishness by the Fed, and while we might be data dependent, don't you think it'll probably be a while before the Fed starts to hold back on slamming on the brakes a little bit and it starts to take its foot off the brake, if you will, because it just doesn't, we had a couple of months because of low energy prices, but everything else seems to be going up. So what should stop the Fed from trying to keep rates high relative to the rest of Europe, relative to Europe and Asia?
Right, and the market is pricing that in already. So the market is pricing in the fact that the Fed is going to continue to hike rates, maybe not at the pace that we initially thought in June. I mean, keep in mind the Fed minutes that came out yesterday. There was a little bit for the hawks, there was a little bit for the doves as well. So we saw an initial sort of bounce back in the market before it kind of settled back down, but we didn't see a massive sell-off because the market is expecting the Fed to continue to hike rates. even well into 23. Okay, we don't see a rate cut before maybe mid 23 at this point. So so it's all being priced in at the moment, and I feel that absent, let's say the next CPI number comes out, and if that is, again, if that shows a sort of zero growth month on month, or a slowing pace, the markets are going to rally again. So I'm thinking about it. It's the pace has led to a sort of reduced yields. Dollar did sell off from its highs, but nevertheless, we're in this sort of, I wouldn't say Goldilocks, we're in this scenario where there is enough support in the market, and the positioning is such, because the positioning is still very defensive in nature, right? And the cash balances with institutions are still really high. So that hasn't come into the market yet. Once we break resistance levels, you could see that coming in. And then the crypto narratives are pretty strong at this point. I mean, look at the meme coins that are rallying. All the canine coins are rallying, even within traditional markets. Look at the short covering we're seeing in Bed Bath & Beyond and all the retailers. The highest shorted names are just massively being bought. And you're getting that scenario back in the market where there's speculation going on. Okay, so it's not all about Bitcoin and Ethereum, but the narrative is spreading, and people are beginning to take more risk. So, and that is only going to happen because at the margin, you're seeing this sort of slowing in growth of inflation.